Okay, we are live now, and I'm here with Dave Chapman, Executive Director of BC Group and OSL. So Dave, your turn. So with your topic, Libra Effect. So happy to see you here. And yeah, we met in Hong Kong many times. Great, so you can go ahead.
Thanks very much, Ivan. Really appreciate the time to be here, and thank you for the participants that have joined this morning, this evening, or in whatever time zone you're in. I'm very conscious of Zoom fatigue in a COVID-19 world. So thanks again. As Ivan stated, my name is Dave Chapman. I'm an executive director at BC Group. Prior to focusing full-time on the digital asset space, I was an investment banker, and I worked for the likes of HSBC, ABN AMRO, Credit Suisse, Barclays Capital, and a range of others. Upon discovering Bitcoin in 2013 and going down that rabbit hole, I left investment banking behind me alongside two business partners, and with an incredible team have been building successful businesses in the digital asset space ever since. BC Group is a fintech company. We're listed on the Hong Kong Stock Exchange, and it's the parent company to our digital assets subsidiary, namely called OSL. OSL is Asia's leading digital asset platform. Its core offering is institutional brokerage, exchange, custody services, all within the digital asset space and servicing a non-retail demographic. Our typical counterparts are professional investors, high net worth individuals, funds, family offices, asset managers, investment and private banks. The team globally, we have around 150 staff. We have presences in Hong Kong, Singapore, Mexico, and the Philippines. But that's enough about me. Let's move on as to why you're with us today. Before we talk about Libra, which I'm here to talk to you about, let's certainly take a look at the state and the history of digital assets. In front of you, you see some of the major milestones for digital assets, beginning with the Satoshi white paper in 2008, and then, of course, the introduction of Bitcoin itself in 2009. We've come a significant way in the past 12 years, and we anticipate just as radical changes over the next decade. And if we take a look at digital assets, so first and foremost, what are we actually referring to when we use the term digital assets? The term digital assets originated in the mid-1990s, and it referred to items such as videos, audio, images, documentation. And things didn't really change much for the next 20 years until the introduction of Bitcoin and, of course, blockchain technology. This in turn enabled the creation of a range of new financial products and services. It allowed the birth of stablecoins, security tokens, central bank digital currencies, and whatnot. And it's these technological advances that have given the term digital assets a new and much broader definition. So for those that aren't very well initiated, let's just do a very quick refresher on digital assets as they're known today. So Bitcoin entered 11 years ago in 2009. It was the world's first truly decentralized peer-to-peer electronic cash system. Bitcoin was the first blockchain technology the world has ever seen, and it benefits from the first mover advantage. And it's the most thoroughly battle-hardened cryptocurrency to date. It currently maintains a 65% dominance in comparison to all of the cryptocurrencies combined. We have the wider crypto market. So whilst Bitcoin was first, there are now over 5,500 cryptocurrencies in circulation with a combined market cap of around $250 billion US. This category includes well-known crypto brands such as Ethereum and Ripple. We believe that there's going to be a significant consolidation in the number of crypto initiatives that will continue to be supported, and thus many of these 5,500 tokens may well be essentially worthless in the near future. We had a phase that was very popular in 2017, 2018 with ICOs, or initial coin offerings, sometimes referred to as Kickstarter on steroids. Put very bluntly, there was no faster way to raise capital during this period than to perform an initial coin offering. It was also the primary driver as to why the entire crypto market pushed a market capitalization of almost $800 billion. That was before many of the projects and initiatives succumbed to non-delivery, project exits, scams, and fines and jail time for those that had blatantly ignored securities regulations. Which brings us on to our next digital asset, security token offerings or digital securities. They're a form of tokenized digital form of traditional securities such as real estate, venture capital, private equity, physical assets, hedge funds. It could really be anything. We believe that security tokens are going to play a significant part in the future of capital markets. Our next digital asset is stablecoins. So traditionally, stablecoins were crypto tokens designed to eliminate the volatility by backing it with an asset or a fiat currency that remains stable. For example, the US dollar. While stablecoins are commonplace in the crypto community, the term made much wider mainstream notice with the announcement of Libra last year. Libra is not strictly a cryptocurrency, as it does not operate on a public blockchain, but regardless of the varying type of stablecoin, they are intended to be fairly stable, so that will enable payments and remittances without the volatility of cryptocurrencies such as Bitcoin. And then finally, we have the CBDCs, the acronym for the central bank digital currencies. This is the digital form of fiat money. Fiat money is currency that's established either by a government, by regulation, a monetary authority, or law. A central bank digital currency is a high security digital instrument, similar to like a paper note. Okay, it can be used as a form of payment, a unit of account, or a store of value. And just like paper notes, each unit is uniquely identifiable to prevent counterfeiting. So let's talk about what the rise of stablecoins. The global interest in stablecoins has grown significantly over the past 24 months. From a market cap perspective, from a regulatory perspective, and obviously with the Libra announcement in June of last year, it's generating an enormous buzz from all sectors and also from governments and regulators alike. Volatility in the market resulted in the move to stablecoins as investors searched for an easy conversion way to float to cash in the event when crypto was seen too volatile. Global interest has definitely been a boon to the market, growing from zero to over $10 billion, and that's happened in a relatively short period of time, since around 2017. Tether, it continues to be the flagship stablecoin and accounts for most of the global market share, around about 80%. And it was created, as I said before, to be tethered to the US dollar as its digital equivalent. As I said before, with price stability, stablecoins are meant to offer a more practical medium of exchange for daily goods and services. Let's talk about Libra. Because of its unique structure, proposed regulatory framework, and very high profile, we believe that Libra can help accelerate digital assets regulation and facilitate some of the entry for institutional players in this space. It was originally going to be a currency or a basket of currencies backed with government debt securities. It had a global regulatory model with its original Libra being the currency, Calibra being the wallet. It's quite unique in its governance structure compared to traditional stablecoins or crypto. And obviously it's going to have profound effect on current economics and money services companies. Facebook was originally the force behind Libra, and we do believe it's going to be a very large disruptor because of its large user base. We have to remember that Facebook boasts around 2.6 billion monthly active users, which is pretty crazy. Let's shift it up a bit and discuss the difference between Libra and other digital assets. Okay, so in front of on your screen displayed is a quick table to try and summarize the differences between Bitcoin, central bank digital currencies, and Libra as itself. If you look at some of these attributes that are displayed in front of you, we talk about the usage. The usage of Libra will be used by many, but notwithstanding cross-border payments, payments online, physical stores, it's going to have a huge amounts of high accessibility. We've touched on the user base. The network effect increases the enormous chance of market penetration. And as I said before, you have to keep in mind that Facebook's reach is absolutely massive. As I said before, in Q1 of 2020, Facebook had over 2.6 billion active users. That's 33% of the world's global population. And that's absolutely incredible, whether you like Facebook or not. That is absolutely incredible. Given that Libra will not be operating on a public blockchain, it will most likely mean that it is highly scalable. Okay, they'll have the ability support a large number of users and transactions. There are, things aren't all rosy with new technology as always. There is a privacy concern. The use of Bitcoin and cryptocurrency doesn't always require user identification, though that is changing with the FATF travel rule. But historically, Bitcoin has been free to access, free to use without any KYC. With Libra, we will see a number of elements being discussed around privacy. So what's changed since the initial Libra announcement back in June of 2019? We then had Libra 2.0. So Libra 2.0 is a significant development that it now proposes to offer a single currency stablecoin. So maybe Libra USD, Libra Euro, Libra Pound, in addition to a multi-currency basket, which could potentially enable a seamless integration also to central bank digital currencies. The proposal also refined the Libra reserve. It changed Libra technology from permissionless to permissioned only, and it included safety enhancements with a robust compliance framework, which is going to be required if it has any chance of getting approval from the various regulators globally. At the time, at least 80% of the reserve would consist from short-term government securities issued by sovereigns that have a very low credit risk. So we're talking A+ S&P rating, Moody's A1 rating, or higher. And those securities trade in a very highly liquid secondary markets. The remaining 20% will be held in cash with overnight sweeps into money markets that invest in short-term government securities, the same risk and liquidity profiles. It's relatively early here in Hong Kong, and when I woke up at 6 a.m. this morning to prepare for the webinar, there had been some significant updates overnight, which obviously always makes a webinar a little bit challenging. Fortunately, our good friend Henry Arslanian from PwC has done a great job of already summarizing the main changes overnight. So shout out to Henry, thank you very much. The changes that have occurred over the past 10 to 12 hours is that the name of the Libra wallet, Calibra, has now just changed to Novi. Novi will be usable as a standalone app, as well as in Facebook Messenger and WhatsApp. Real huge amounts of penetration and access and user reach. There'll be no hidden charges to add to send, receive, or withdraw money, and your transfers will arrive instantly. Novi customers, as I said before, there will be an element of KYC, and in this case, it looks like they will be using a government-issued ID. Unsurprisingly, customers have access 24 hours a day, 7 days a week, and we're still seeing Facebook hoping to launch this this year. So looking ahead, stable coins, they do definitely have the potential to revolutionize global payments and settlements. Facebook, Libra, Novi, Facebook themselves, to state one last time, it really has the size and the user numbers to disrupt digital assets and banking as we know it. You have to remember Facebook does conservatively reach at least 30% of every human being on this planet, and that is incredible. And people doubt whether or not Libra has a chance of success. My counter to argue that was it's hard to fathom how this won't be a success, in my opinion, just given their enormous reach, accessibility, company valuation, the resources, the spend. For me, it ticks a lot of the boxes for it to be a success. The announcement of Libra's 2.0 release in June 2019 definitely made central banks nervous. But Libra has now made the necessary adjustments to push forward. We have to remember when Bitcoin was first introduced, a lot of people sort of dismissed it. It's difficult, whilst it might be easy to dismiss what has been seen as a fringe technology, albeit it is growing momentum with regulatory clarity, traditional finance adoption, and inclusion. The reality is when a tech company the size of Facebook comes out and says that they're going to release a token that can disrupt banks and payments as we have known it for the last 100 years, of course, central banks and regulators get very nervous. And finally, it's probably of no surprise that I have the opinion that Libra will be widely adopted as a catalyst for global digital asset use. It's expediting access to digital assets and digital payments to a huge, huge number of individuals globally. it was funny when Libra was first announced. The Bitcoin naysayers were punching the air, declaring to me that this would be the death of Bitcoin. Frankly, I was actually punching the air in response because I see Libra offering the user experience that Bitcoin should have. But as a result of such a slick, thoughtless, and seamless user experience, it has expedited digital assets, including Bitcoin adoption, by at least 10 years. So despite me being very pro-Bitcoin, I couldn't have been happier when Libra was first announced as a result of me believing it's going to be the on-ramps for a significant amount of people to get more comfortable with digital assets as a whole. Thank you for your time today. I would definitely welcome any questions. If you'd like to know more about us, you can contact us at osl.com. And obviously there's additional contact details on the screen today.
Nice, Dave. Thanks so much for a keynote, and so very interesting insights about Libra. And yeah, so you mentioned Henry Arsenal, so he took place in our conference yesterday, so opening it. So
yeah, Henry was a lifesaver for me today.
Yeah, great. Thank you very much for a keynote. Yeah, so that was Dave Chapman from BC Group and OSL. Thank you.